Hey guys, happy Thursday. It is July 3rd. Tomorrow's a holiday. Don't forget. In this video, I want to talk with you about the Q2 box office and my estimate for AMC's Q2 earnings, which we will find out in about 6 weeks. So my spreadsheet is just kind of a guess to give you a rough idea of where we're likely to end up. The Q2 box office, as you can see highlighted in green here, $2.67 billion, just under where we came in on box office in 2023. If we look at what the analysts are expecting for Q2 over on Yahoo Finance, we have revenue average estimate 1.3 billion, average EPS -10 cents. That is the average of 7 different analysts which have provided their estimate for AMC for Q2. And we could just check on stockanalysis.com. For Q2, it's 7 analysts, probably the same 7. They have 1.35 billion for the revenue and also earnings per share at -10 cents. Let's see what the spreadsheet, my model using previous data and some estimates on income and expenses looks like compared to these analysts' estimates. Up here at the top in pink, I have put in the domestic box office, 2673. And then the next big guess that we have to do is what percentage of that box office did AMC capture? And just based on historical numbers, looking over to the right on this column right here, I have generally 3 numbers that I use to give you guys a low, medium, and high expected outcome. 28%, 30%, and 32%. I've highlighted in yellow the Q2s from the last 3 years, and we look back, we had 29, 27.7, and 28.3. So I think to be safe, we should use something around this 28% column for Q2 25. And if it's better, if we get a better market share, then the outcome will be better than what we see in this column as we scroll down. We'll see here that the total revenue, 1352, 1.35 billion, is very close from my spreadsheet to what the analysts are predicting. Moving down on this column, that would give AMC an operating profit of $86 million after all of the expenses are taken out from operations. Then we have the corporate borrowings or the interest expense, which is higher than any of those 3 previous years in yellow off to the right. 109 million roughly is what I'm expecting for interest expense in Q2. We get a grand total of -$14 million net loss for Q1. Now, there are a couple ways that this could be better. AMC could capture a higher market share than 28%. You can see that that would give AMC a very nice profit situation if they were able to capture more market share. Or even if it was only 28%, and let's say the food and beverage, instead of being 63% of admissions revenue, let's just say it was 1% higher, that would change the number at the bottom into a positive 12 million bucks. That's a huge benefit. You guys hear me say, go to a movie and buy concessions. It can make that big of a difference. 1% more of concessions as a percentage of box office is huge. And I'm sorry to those of you who are telling people don't go to the movies, don't buy concessions, don't buy merch. The numbers don't lie. 1% is a meaningful difference to AMC's bottom line results. So in closing, I would say there's a chance that there could be a loss this quarter, even with a box office of 2.673 billion. It really is going to come down to, I think, the 2 assumptions. What percentage of the market share did AMC capture? Did we do better than the last Q2s for the last 3 years? And is the food and beverage going to be big enough to swing us into a positive number? Those are the 2 things that I'm going to be watching. Now, in terms of Q3, just a little bit of look ahead. I'm not forecasting any scenario in which Q3 is going to be profitable for AMC. Based on the movies that I'm seeing right now for Q3 and the analysis I've done looking at Q3 estimated box office, The other thing is, as we've been talking about this new debt deal this week, I know people are telling you something different, but the interest expense is going to go up starting in Q3 into Q4 because of this new debt deal. I'm not going to bog down this video talking about it, but I will do a separate video in the next day or so as time permits, showing you all of my DD and exactly from the filings why I believe that, and I'll back it up, and then we can have a discussion if you don't agree. But I mean, I'm just reading and then using math, so for me it's not really debatable. But you know, if you're a CPA, maybe you catch me off guard on something. I've already talked to CPAs about this, and I feel pretty confident in saying that the interest rate is going to go up starting next quarter due to this next deal. Despite what Adam Aaron said, despite how the bullet points in the 8K are worded, yes, there was a slight reduction in balance sheet debt. What they don't talk about in any of the bullet points is the meaningful increase in interest rate, both cash and payment in kind. Just a little preview. I don't want to derail the Q2 conversation, but I do want to prep you because this is going to be a rough one. This is going to make people mad if I tell them that interest rates are going up, but they are. I'm going to say my official number for Q2, I'm going to go back to 63% on food and beverage, somewhere around negative $14 million. I'd like to see break even or positive, obviously, but as you guys know, I tend to err on the side of caution instead of on the side of hopium. So, you know, negative 14 to 0 would be fine with me. It'd be what I would expect. And anything in the green would be a bonus, and we can pop some champagne. If you guys have any questions or comments, leave them for me down below. Thanks for watching, and I will see you on the next video.